Hey folks, Bob Desmond here over at the Contrarian Trader, and welcome to Best Stock Charts for the coming week. This is the weekly newsletter I send out for free to anyone interested in looking for opportunities, trade opportunities for the next trading week. We'll go over these charts in greater detail with members on the week ahead commentary, which is where we review the health of the overall market. That's market pulse check. Then we'll do a deep dive into the charts that we really like as probable trades as we proceed into the coming week. So we do have a new bronze level. If you would like the week ahead commentary, which is going to be coming out later on today, just sign up for the bronze level. If you're happy with the Best Stock Charts weekly newsletter, enter your email address below. We hate spam too. You will not be spammed, and you'll get it every week to your inbox. So before we go to the charts that we're watching, we're going to first go over the trades that we closed out this past week. How was our week? It was good. It was good. It was pretty good. A couple of our positions that we're holding, they were down on the week, but we did book profits on two short swing trades. I'll talk about those. Topics on the week ahead commentary, besides the charts, besides the holistic view of the overall markets and the stocks that we're watching, we're going to talk about how does this tax bill impact us? It's going to impact people differently based upon geography and, of course, based upon income. So we'll talk about that. We'll talk about Jay Powell, the nominee for Fed chair, who's all but a shoo-in for the position as next Fed chairman. And we'll also talk about how these topics will impact the markets moving forward. Let's get to the charts. All right, so General Motors, we opened up a short position on the 9th of October, right about here. We had RSI, which was at about 90, unheard of for an S&P 500 name, but we had it. So we knew that we had limited risk to the upside and a lot of reward to the downside, which was all but inevitable. So we traded sideways for a few days after we opened up that position. We then added more here on the 12th as we broke support, made a new daily low. The shares did rebound, and they even broke out. And I said to myself, if we make a new daily high, we're going to have to look to stop out of the trade because that's a continuation breakout. But the reason why I stayed in the trade was that despite the fact that we had broken out on a daily basis and volume was good that day, it was really good volume. We closed off the highs of the day. RSI was making lower highs, as was Stokes, and they were also breaking down to new lower lows. That's a problem. This was the market sending us a signal that all wasn't well with this breakout. So we did set a stop. A new daily high would take us out of the trade. But the next day, we had a breakout point failure. I could have leaned into the short on the 25th at the close because we know from past experience that when you have a breakout point failure, or you might hear it called a bull trap, that in all probability, you're going to retest the prior lower band of support, which we did. And in all likelihood, you will break support and head lower, which we did. So we did book profits right here on the 30th, near the lows of the day. A nice trade. We did reverse 2 days later, and I was happy to be out of the trade. A good quick swing trade on General Motors. The next position where we took a swing trade profit to the short side on was Netflix. Now, Netflix had already reported earnings. I wasn't concerned about that. I was watching the Stokes, and the Stokes were declining. And they were, the day that we entered the trade, both lines on Stokes were trading down below 50. That's a big negative because we know from past experience that rallies fade when you have both lines on Stokes trading down below 50. And sure enough, we got a rally on the 25th. It reversed on the day. The shares did manage to limp up. And then we leaned into the short we added on the 27th, which was right here, because we knew we had a resistance level above, and if we closed above that resistance level, that would be our stop point. If we're able to A, close above resistance, B, retest it, and then 3, pass the 3-day rule. What's the 3-day rule? A breakout and 3 consecutive days above a breakout point. That would have taken us out because the setup would have been then to the long side. You would have wanted to have been long. Now, I'm glad we booked profits on this position because the shares have since rallied back, and you could argue that we closed, let's just say, at resistance, and Netflix is now looking like a buy. So we're looking for a continuation move higher next week, a new weekly high. And then, of course, we'll look to add to the position if we decide to get long on a rally up and through 204.38, which marks the all-time high. So those are the 2 trades that we booked profits in last week. 2 nice trades. We did send out alerts on these trades. A number of members did book profits. Congrats, and good for them. A couple of them, I get ribbed on this. They stayed short of General Motors. I'm glad they made more money than I did. Congratulations. On a percentage basis, they made more money. Good for them. And they're still short the shares of General Motors. And I think that they're probably right. It probably will continue to get weaker because these stocks are not looking good. You have RSI down below 50. That's not a good sign. It's below the neutral level. So GM is looking weak. I would not look to buy the shares right now. Now, I'm going to try to get all of the weekly charts that we're focusing in on for best stock charts in under 10 minutes. That's my mandate by my developers and a lot of fans out there who watch best stock charts. So I'm going to try to get through them. If you want to deep dive into these charts, sign up for the bronze level. It's an basic introductory level, and you get the week ahead commentary plus monthly market wrap. That's where we do a monthly wrap on how we traded the prior month. And you may be asking, why haven't I done that yet? Why? It's because I like to do it after the first week of trade is in the books. That way we could see what sectors have made a new monthly high. And in all probability, that means they're going to see higher highs throughout the month. So we have that in the books now. I'll probably get that done Monday or Tuesday. So that's for bronze members, silver members, and gold memberships. We're still closed. So just bronze and silver memberships are open right now. So let's get to the charts. I'm going to blow right through these. But before we get to the charts that we're watching for the coming week, let's begin with a review of last week's symbols. How did they do? It's still posted. Last week's commentary is still posted on the website. If you watch this on Stock, Twitch, Twitter, it's posted there as well. So just go check out my last postings. But the first chart up, COLB, it was up 0.8% since last week, an up week. Grubhub, it had a strong week, up 3.62% since last week. We're bullish on it. FedEx, it was down. No continuation move higher last week, down 2.7%. Facebook, it was up 0.58%. Live Nation, it was up 1.46%, a volatile week. A number of these same names are going to be on our watch list for next week, so more to come on the week ahead commentary. EGY, Valco Energy, another one on best stock charts for the coming week, up 27.1% last week. Centerpoint Energy, that was down about a half percentage point. Halcon Resources Corp, that was up 6.67% on the week since we last spoke about it. And CNQ, which I was very bullish on, up nearly 6.5% on the week. First Solar, it was up 3.81% on the week. Broadcom, it was up 8.2% on the week. So net, a very strong week last week for the stocks I discussed as being very strong long candidates last week. So again, the video is still posted on the blog if you want to check it out. Let's get to the charts we're watching for next week that are setting up as very nice setups. Okay, we're going to begin with Pinnacle Financial Partners. Again, this is going to be just a very holistic view, weekly charts only. If you want the deep dive, sign up for our gold or bronze level memberships. Enrollment is now open. Gold level, still closed. I just can't take on any more members right now. I want to be able to provide quality of service. That's what's most important. So too many gold members right now. When I have the opportunity to open up that membership level, I will. All right, so let's begin with PNFP, Pinnacle Financial Partners, weekly chart. Nice chart, not ready to be bought yet. We're looking for a breakout of the stock above this upper band of resistance. A good week last week, and you may be saying, Bob, it was down. What are you talking about? It closed off the lows of the week. It held support for, the sixth consecutive week. This is a strong consolidation. The chart looks good. Volume rose to the downside last week. It's a bit of a concern. But overall, net, we're holding support. I like the financials, and I like PNFP for now, as long as it holds support. Next chart up, IGT, weekly chart. You have RSI hooking up. You have Stokes hooking up. The shares were up last week, 5.29%. The problem is this. We haven't broken out yet. I will not buy the shares until we either A, break out above resistance, or B, pull back and test support. It's not ready to be bought. We'll do a bigger deep dive on most, if not all, of these names on the weekend commentary. Facebook, Zuckerberg, I think, just lost his damn mind last week with his statement on their conference call. I listened to it, and I think that he is a political liberal nut, IT genius, but net, I think the guy's a nut. So the shares, they still closed higher on the week despite the guy. And I don't think that, given the price performance of the shares, I'll talk more about it on the weekend commentary, but I don't think that the market's buying it. The fact that they're going to add on so many new employees and incur such high costs. And I'll discuss it in greater detail why I believe that on the weekend commentary with members. Live Nation, we spoke about this one last week. It remains on our watch list. It broke out last week. I love this setup. We'll be talking more about this name. Bullish key reversal on the week, meaning it was down on the week. It closed higher on the week. Volume outstanding. There's nothing not to like here. Stokes rising. We'll be talking more about Live Nation on the weekend commentary. CVE, Synovus Energy, weekly chart. This is a new one. I'm not ready to buy yet. I love the setup here on Stokes. I like the setup on RSI, all hooking up, but we haven't broken through resistance. So we are on standby until we see better price performance, and that's a strong demand that I'm making of the shares, right? It closed up 10.35% on the week last week. That's asking a lot. Yes, right? The shares have been in a huge downtrend. I expect a lot when I see a stock that is trying to go from downtrend into an uptrend. You have a lot of overhead supply here. Don't discount the amount of pressure that these buyers who have been holding for all of 2017 and much of 2016, they've been sitting there with a loss. They want their money back. The minute that entry on their trading platform goes from red to green, they're out. All right? It's all psychology. So don't discount the amount of influence that overhead supply can have on a stock, even though it put in a performance of 10.35% on the week. So a lot of overhead supply. I'm on a timer here. I'm being held to account. So we like the shares. Not yet, though. EGY, we spoke about this one last week, up 27% last week. I think we still have more upside potential here, but the easy money has been made until we get through 1.17 on the shares. Why is that an important number? It's because that's where you start breaking through overhead supply. Right now, we closed right into it. Caution, flag is on the track. You may get a pullback next week. That's an opportunity to begin opening up more of a position. I think that, folks, we're going to talk more about EGY on the weekend commentary. Next chart up. This is a new one, TXT weekly chart. We closed, let's call it at resistance. Not a buy yet, but very close. I like the shares. I like the setup here. Bullish key reversal on the week. Volume could have been a bit better, right? Volume matters. What does volume imply? Institutional demand. So the chart looks good. Not quite yet, though. Would I be a buyer? The next chart up, HK, Halcon Resources. We spoke about this one last week. It had a good week. No breakout yet. We're not buyers yet. RSI rising, holding support. Stokes are beginning to hook up, holding the neutral level at 50. Good stuff. Next chart up, Canadian Natural Resources. Love the chart. Broke out last week above 34.49. Is it extended? Stick around for the week ahead commentary where I discuss how the daily chart is looking and what is the best risk reward entry point. It may not be the time yet to go jumping in and chasing these shares. First Solar, same deal here. We were bullish on it last week. It rallied nearly 4% on the week. Is it time to buy? Not quite yet. And we'll talk more about it on the week ahead commentary because we're a bit extended on a daily chart. Volume, though, outstanding. And we'll talk about the catalyst for why I think that First Solar is probably going to see considerably higher highs in the future. So members, stick around for the week ahead commentary. And if you're looking for more details on the bronze and silver levels, look above this video if you're watching this on the website for the link, which will take you to the membership level benefits comparison chart, and you can see what's right for you. So First Solar looking good, a bit extended, caution flag nearing the third standard deviation Bollinger Band on a weekly basis. You did see some sellers move in last week. I think you're going to get a better risk reward entry point in the future, not on Monday. Well, maybe on Monday if you get a severe enough pullback. Big lots. We've spoken about this one for several weeks now. I like the weekly setup. We're probably going to be long of big lots sometime next week. We broke out a few weeks ago. It's been volatile. It's been retesting the breakout point. We had a bullish key reversal last week. RSI rising, Stokes rising, all good stuff. Volume, light, very light. Just be careful of the volume. But big lots looking good into the next trading week. Skyworks Solutions, I spoke about this one last week, up nearly 5% on the week. We broke out. Leaning into the third standard deviation Bollinger Band. Members will talk more about the daily setup. How would we enter the trade using the daily and 2-hour charts on the week ahead commentary. Next chart up, Kroger. This is a safe haven trade, certainly not a continuation breakout trade. The shares are in a downtrend, so there is risk here. More risk than the other stocks I spoke about. But it's been consolidating. It did break out last week. We'll know in the next week or two whether or not we have a buy signal on our hands. I don't believe I would be a buyer right now based upon this chart. Soon, though. We'll watch it. We'll see how it performs. We have a breakout on RSI. Very strong week last week on RSI. Not so much on Stokes. More to come on Kroger. NKTR, Nektar Therapeutics. Interesting chart. We retested support last week. No breakout yet. Stokes rising. No breakout yet on RSI. Volume light. Caution. So we'll look to buy on a retest or a breakout. I should say and/or. Next chart up. KeyCorp. Weekly chart. Bullish key reversal on the week. Stokes rising. RSI is broken out. The setup is looking very good here to the long side. Volume light. Let's pay attention to volume, right? So we'll talk more about a good risk-reward entry point on the week ahead commentary. LMNX, Luminix, weekly chart. We broke out last week. I think we're going to get a retest of the breakout point. I would not chase the shares. Could be wrong. Wouldn't be the first time. But normally you're going to get a pullback on the shares. I would wait for that for my risk-reward entry point. RSI broken out, validating the breakout point. Stokes rising, good stuff. Volume, outstanding. Thumbs up to LMNX. Yum Brands, weekly chart. Broke out last week, leaning into the third standard deviation Bollinger Band. Could it proceed higher? Yes, but not with my money. It's a bit extended on a weekly basis already. Volume was good, but not great. We have RSI, double bottom setup and rising. Good stuff. Stokes rising. More to come on Yum Brands on the week ahead commentary. That's coming out tomorrow. Burlington Stores, tomorrow being Sunday. Burlington Stores, weekly chart. We broke out last week. I'm not a big retail guy. Burlington, though, big lots, both looking good. No breakout yet on RSI. No validation of the breakout on price on RSI or on Stokes. So what does that tell me? We're probably going to get a pullback and a retest of the breakout point. Let's pay attention to the daily charts from this point forward. Volume, thumbs up. Great volume on a weekly basis. Institutional demand. We always want to watch where the big money's going. Cheniere Energy, LNG the symbol, great week last week. We had broken out several weeks ago. We pulled back, retested the breakout point. I've spoken about this several times on this video thus far. And this is what I'm referring to when I say, let's get a pullback and a retest. Because we broke out the week of October the 2nd, and it took 1, 2, 3 weeks for us to pull back and retest the breakout point. It's simply a validation, certainly not a sign of weakness. And then last week we broke out, and now we're looking for a continuation breakout on LNG. Energy is looking rock solid, folks. On the weekend commentary, I'm going to be talking about the energy sector in great detail. I really like the sector, and I think that LNG is going to be a leader in this new bull rally in energy. So members, more to come. EIDO, this is an ETF that puts you long of Indonesia. I love the setup here. Weekly chart, double bottom setup at the 50 level. Stokes are rising and above 50. Good stuff. No breakout yet on price. So we'll be watching for a breakout after this very long consolidation. I think we're going to get a breakout soon. Volume was weak last week. EIDO looking very good as an investment, not a swing trade, as an investment. NI Resources weekly chart. We broke out last week. Everything's looking good here. We have RSI rising, Stokes rising. Volume, outstanding. Big thumbs up on volume. Institutional money moving in. And that's it for this week, folks. I'll talk more about the daily charts on most of these charts that I've discussed on the week ahead commentary. Don't forget, we have a new bronze level membership. Click the link above. It'll take you over to the comparison chart of bronze versus silver versus gold. Gold is closed to new members right now, but bronze and silver are open. Bronze and silver level members get the first opportunity to upgrade to gold when those positions open up. And then those folks who have opted in for our Best Stock Charts week newsletter to the email list, those folks get notified second. And if we still have spots open after, we let the bronze and silver members know. And of course, the Best Stock Chart newsletter subscribers know. Then we'll let the general public know as well that we have gold open. So jump on those positions while they're hot. They go very, very quickly. And that's it, folks. Members, let's get started on the week ahead commentary. Everybody else, enjoy the remainder of your weekend. Have a profitable trading week. I'll talk to you soon. Be well.